All right, welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy, back in the saddle again. We had a great trip through Illinois this week. It was fantastic to get out in front of y'all, and I really want to thank Chris Peters at Heritage FS in Gilman, Illinois. We didn't stop there, but we went through it. But it's been fantastic to see y'all out there. I appreciate it, and I can't wait to come back out and see you again. But it's always nice to get in front of the folks that watch this show and watch this station and really get to hear and see what your concerns are. So hopefully we put a few of those to bed. Hopefully we gave you some good information, but it was always good to see you. Appreciate everything that was, the hospitality was fantastic. All right, let's get to the markets though. This is the overnights, right? Let's talk about what we've got going on in corn. We bring up that corn board and that's gonna show us that. What we got? It's not changing. We don't have a corn board. Let's get straight to our guest then. Let's go right to Brian Hoops. Brian, thanks for sticking around and bailing me out here. We have a little technical difficulty here, but it's not that great of a day. At least it wasn't when I was doing the radio show. Maybe you can give us some different guidance there. But what are we looking at here for today? What are your thoughts?
Yeah, good morning, Scott. Corn down about 4.5 overnight. Beans about 10 3/4 lower. So, those commodities on a slide in here. We've rallied yesterday when we talked. We had rallied about 40 cents off of the lows in soybeans, about 20 cents in corn, and that was putting some premium in because of hot and dry weather in Argentina. Well, the models yesterday started to hint at rain returning to Argentina. This morning, they confirmed those rains returning to Argentina. And then the Buenos Aires Grain Exchange came out with their estimates of the Argentina soybean crop, increasing it by 500,000 metric tons. They also increased the corn crop estimate by another 1.5 million tons. So they're saying that crop, which is off to a good start, got bigger here recently, and probably these rains are going to help out and stabilize after some heat. So market's taking back some premium here. We did have a sale this morning of 100,000 meal. That's going to be pretty much just, I think, ignored by the trade. It's to an unknown destination. Wheat futures also turning lower. And, there's just not that much fundamental support for these markets in here after the export numbers that came out yesterday, rains returning to Argentina. If we're going to see any type of support, I think it comes out of Kansas City wheat with the dollar being down and that market starting to show signs that it's breaking its downtrend. Maybe we get a little additional short covering off of this weakness. But other than that, corn and beans look like they may just continue to slide here.
So I'm not a broker. It's not my job to give advice. But, over a beer in a tavern over the last 3 or 4 days, tell me what you think about what I said. Look, I still feel as though that there's risk to the downside. However, we kill the crop probably twice a year. We're going to have a situation where we scare maybe some weak fund shorts out. If you can make some sales above, $5.25 in D's corn or 75 cents higher in beans, you probably got to be lightening the load there. Yes or no?
Absolutely. That's the case. A lot of producers are talking about that area that you mentioned, 520, 530 in December corn. If it gets back to that area, they're willing to start making some sales and lighting that load, laying off some risk. The thing to do in hindsight, obviously, and we talked about this at length, the market was telling you this fall off the combine to sell that big carries that were offered in the July timeframe. And if you made those hedges, maybe you came back in with some options or futures to try and re-own it. But these markets are in steadfast downtrends, and we probably will hurt the crop at some point during the spring or the growing season here in the U.S. Those will be times to reward rallies in the marketplace and use those option strategies to kind of balance off your risk.
Yeah, that's another thing too, right? Because here we talked about it. Another big topic was, how the farmer may be undersold because they probably were a little undersold going into harvest anyway, but pulling out 10, 20, 30% more than they thought they got because the hybrids overperformed. Now you really are undersold, right?
Yeah, you are. And a lot of people just kind of looked at the corn price this fall. Hey, I could have had a better price in the spring or last summer. I'm going to hold out till it gets back to there. And it has never came back and it's not going back to that area. So a lot of guys just kind of put the crop in the bin, stored it and forgot it instead of doing that storage hedge. There was 45, 50 cent premiums at one point from selling the July carries. And we're going to erode those carries until we get a crop threat.
All right, great stuff. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Brian Hoops. And he's in Springfield, Missouri. We're right back after this. All right, welcome back into Market Day Report. This is the time we talk about the livestock. And as you can see, we've got that technology up and running. They say it's like, just do the old reboot. It works every time, right? You don't need an IT degree. Just shut it off and turn it on. All right, let's bring up those live cattle quotes. What do we got going on? Well, this is adding to yesterday's gains, and I did yesterday all day as well. We weren't looking that great early on, but live cattle really came back strong. So did feeders. And now we're adding to yesterday's strength. So that's good if you're in this market. Live cattle up front, Feb's up $2.37 to 177.72. And that's close to the day's high by about what? That's going to call it 25 cents, right? And then we've got April up $2.35 to 180.70. And that, too, is only about 40 cents from the high. So tacking on yesterday's gains, that generally, in my experience, would say that's a pretty healthy market. Let's see about feeders. Look at this, really tacking it on. All right, so now it looks as though I'm going to call this a breakout. We had some technical levels I think we went through, and the breakout's happening here. It's in full display. March is up $4.40 to 238.17. And we've got April up $4.12 to 243.92. Finally, let's see what lean hogs have got in store for us. And they are higher, but not very much. Kind of a quieter board, 40 cents higher up front in Feb. 74.30s last there. Good news is we're only 30 cents off the high of the day. Bad news is we haven't even had a dollar range, so we can't get too excited about it. April's up 52 cents to 82.55. Let's bring back in our guest, Brian Hoops. Thank you very much, Brian, for sticking around. All right. Is this a technical breakout to the upside? What am I looking at here?
Yeah, it's continuation, I think, of the breakout. We probably started back in December when we put a bottom in, and now we're starting to push higher, continuing to throw a lot of money at this market. Cash trade coming in yesterday about $1 to $2 better in the Southern Plains at 174, 175. On a dress basis, we're at $2 to $4 higher. So strength is out of the cash markets and coming into the futures here. So, there was a lot of talk about maybe some of the insurance companies getting short, trying to protect themselves while the market was moving lower. And I think they are starting to find out that this futures market is a little bit more volatile than the stock market. And you're seeing probably a lot of those positions being unwound, meaning they're buying back those short hedges they put in place. So the fundamentals are lining up to be friendly into the spring and into the summer months. I don't think we're close to putting our highs in yet. But, you certainly could have some sort of a correction, maybe a little technical pullback after big gains yesterday. That's probably going to be buying opportunities as we go into the next several weeks.
Yeah, it's just maybe finally, kind of, sort of, all those type of words, that downdraft that we had from last summer into the fall. That was a big sentiment move, right? There wasn't a ton of fundamental news that made that happen, but it was just kind of everybody wanted to get out of the movie theater at the same time.
Absolutely.
Maybe, maybe that sentiment's starting to change the other way. What do you think?
Yeah, I absolutely agree with you. It was more of a sentiment move that the funds decided to unload, and they were such huge longs in the market that it was a small door, small window to get through. And now we're starting to rebuild those longs. And as they rebuild those longs, it's just going to continue to push prices higher. I think the sentiment has definitely changed. We're out of the downtrend. We're pushing higher into the spring and into the summer highs.
And because people will still have their burnt fingers from being long the last time, they might not be on board this one, and that will also give it a little bit more fuel to the upside, right? Because it won't be a very well participated rally, and that's what happens when you get these things happening.
That's right, and there'll be a lot of people starting to join the parade here eventually, which will add more fuel to it.
Yeah. Okay, man. Have a great weekend. Thanks very much for coming on. Great to talk to you. Brian Hoops, it's good to see him. I haven't seen him in a while. Doing the morning shift, it's different, right?
It's different. You get to see different analysts.